Okay, this is the order flows trade analysis for June 20, 2016. My name is Michael Baltos. I'm the founder and trader at Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. The main tools that I'll use in this presentation are the Order Flows Trader, the Order Flows Delta Scalper, the Order Flows Price Rejector. You can visit my website, www.orderflows.com. This is the URL up here, to learn more about the different software. The Order Flows Trader is the main software. It runs on the NinjaTrader trading platform. To learn more about NinjaTrader, visit ninjatrader.com. Okay, so there were 3 trades I took, and one was a scratch, one was in the bonds, the others were in the Eminis. First trade I took in the Eminis was a losing trade. Then I had a small winner, and then a nice runner. Now, this morning, it's Monday. This is the week of the Brexit vote. The markets were acting, pretty volatile this morning after the cash open. And we came up into our high. This is a E-mini 5 range chart. We hit our high. Cash opened. 8:30. We started rallying. Coming to the high. I took a short here at 2087, and looking back, I'm not sure. I really should have taken this one, but I was getting short on the back of all these nice selling imbalances: 3,700, 1,200, 1,500. 1,100. We're up here near our highs, got all, negative deltas. We got a couple divergences. You got a ratio here. I got short at 87. And, even in this bar, you had some nice selling. You had very nice negative delta. I had my stop in at 89 and a quarter. So it was 2 and a quarter ticks, or 2 and a quarter points, 2 points and a quarter. And, as luck would have it, it just turned around right on me and stopped me out. I got short again a little bit later. After 9, we got a ratio. Got a ratio that I like. It's blue. I got a divergence here. I got the price rejector. Even in the next bar, I get in the single print. I got a ratio that I like. I got short at this point of control. I threw an offer up here. I waited for the market to come back. And I got short at 91 and a quarter. Then the market just started to sell off, and then it just got stuck in this bar here. It was giving me a hard time. I ended up covering it, which was a little bit early. I got a point out of it. It just wasn't happening at this time. I just didn't feel good about it, and we started trading back up to almost to my entry price. I got short at 91 and a quarter. I'm looking for on a 5 range chart for a minimum of 2 points, and it happened. The move happened, and then it came back up to my entry price. Am I going to sit through the move, let it happen, don't take my profit, then the market come back up to my entry price and come back down to my move? No, generally it doesn't work that way. What you want is the market, you get short, you want the market to make your move and you take your profit. Don't expect the market to make a move to your profit target, get there, trade there, bounce back up to your entry price, and then make another move. What I was looking for was this move. It happened. I didn't get a chance to take my profit. Honestly, I was looking for, with this volatility that was in the markets today, I was looking for a move down, down below around the 88 level. I was looking for a little bit more. The market had been moving pretty quick this morning. Then this time it just started slowing down. So I got out a little bit early. It did eventually go to my targets down here around the 88 level. I pulled the trigger. I got out early, but based on what I was seeing in the order flow, it just didn't really give me enough reason to stay in the trade. The thing with, with the stop is, or once you're in a trade, you got to be able to read the market to determine if it's going to continue or not. At this point, I've got a point on it. It's not the best trade in the world at this point, but it's in my favor. People could argue, well, you should have just stayed short. Yeah, I could look back now and say it, but when I'm sitting here and this bar is green and we're trading at my entry price again, you got a big, strong positive delta. What are you going to do? You got to make the decision in or out. I'd rather get out with something than, cover it a little bit higher and get nothing. In this case, the market could have just gone straight up and instead of taking a point winner, I'd be taking a point loser. Those are decisions you got to make in trading. Okay, so this next trade in the bonds was, I really had big expectations here, and it didn't really develop as the way I expected it to unfold. So what we had here, we had the swing high, and then we start coming down. You got ratio. Watch the deltas, 500, 400, 200, 68, negative. Then we get this bar of positive delta, 1800. We're sitting in this bar here. We're trading 27, 28. We had a positive delta at this point of, whatever, over 1500, I remember. And, basically what I was thinking here was, you're starting to coming down, but the selling is drying up, right? Because you see, the delta is getting smaller. And then we get a ratio bounds low here. We turn around. We're sitting here. You had a buying imbalance here. You had a buying imbalance where this 1916 was. And you had very strong delta. I was looking for a pop up above 168 even. I got aggressive on my entry. I got in at 168, actually 167.28. I had a stop in at 23 down here, just where this 9 lots had traded earlier. We got down within a tick of it. It did retrace back down to 24 before turning around and going back up and reasserting its positive delta. But then we started trading higher here. 29, 30, even 30, 31. But we weren't pulling away, and instead we're building up this big delta here. Sorry, not delta, this big selling imbalance, and we had a negative delta. And the market's trading 27, 28, 28, 29, going back and forth. I didn't like the way the order flow was working out, and so I just got out. I got out, I scratched it. I got out at 28. I was in at 28, out at 28. Like before in the S&Ps, when you see something in the order flow, yeah, I got out early on the S&Ps, I only took a point profit, but, if I stayed in, I could have got more. Whereas in this case, if I didn't read the order flow, I would have been stopped out later at 23 when the market came back down. It came back down to 22. I then made that move that I was looking for. This is the move that I was looking for here. It didn't happen, but I was reading the order flow and it was telling me, hey, we're not going to make that move, at least not yet. So, I got out. The market's going to give you a chance to get out at a small winner or a small loser or a small scratch, before it makes its move sometimes. So you got to be alert to those and jump on them. So this trade was a scratch. I got in at 28, out at 28 for no loss except for commissions. Okay, so this last trade that I took was on this 10 range chart. Emini 10 range. So, this was my trades earlier. You have this, this was that loss I took. I shorted 87, out at 89 and a quarter. I got short at 91. I covered it at 90 and a quarter. On the 10 range, I remember looking at this, after I got out and saying, I probably should, on the 10 range, it's giving me a better sell signal. I'll say better sell signal, but I've got the same things, and it's going to give me a little bit more power behind the move. Here you had that ratio, you got the divergence, you got the price rejector. Those are the 3 things that I like. So I could have essentially held it, but anyway, I was trading the 5 range chart, and I got out on the 5 range chart. But I got in a little bit later here in this bar. I got short at 85. We have this selling imbalance, and we started trading below it, and I got short at 85, so, it did trade up to 87. I got short just on the other side of this imbalance, but, my, area where I'm going to look for, I'm going to look for this point of control here to hold. And, we traded right up, within a tick of it. We got up to 87. The point of control on this bar is 87 and a quarter. My stop is around the 88 level. So, the fact that we didn't get, up there to stop me out was encouraging. I stayed in the trade, so I'm short at 85, and it's just kind of humming, it's in my favor. This one is taking a long time. This market slowed down this morning. We're on the cash open 8:30 up to here. This was a nice move from 84 up to 92. And it happened, in 30 minutes, more or less. It was pretty quick. But now the market has slowed down a lot. This is around the European cash close time. Honestly, this bar here had very strong delta. I was looking for it possibly to make a run back up, but it wasn't developing. And instead, you got the selling coming in after the European close. I usually like to go with the direction of the U.S. market after the European cash close. And we started selling off. So, I got short. I had a reason to get short here. I could make the argument, I still could have been short from up here. If I was short up here at 91 and a quarter, I'd look like a trading genius, if I didn't cover it. But, nevertheless, I covered it. And, this one, the market it just popped up here initially. I'll say initially, it popped up here over the next hour and a half. But it didn't get up to my stop price. And, so I might as well stay short, right? Normally I'm going to look for about 5 points on the 10 range chart, but I'm going to give it I'm going to let it run. It's, the Brexit vote. Market has slowed down. Europe has closed, and, I want to see what I can get out of it. It's still in my favor. It's still in my favor. I'm still short there at 85. We're trading lower, lower, lower. Came down, into the cash close time. We didn't get down to our low. There was a price rejector signal here, but I'm still short. I want to ride this as long as I can, but the market started rallying back up. Okay, now I'm kicking myself for not getting out there, but still, I'm still in the money. So we close. Okay, and again, I'm not usually one to hold a position, but I want to see how Asia was going to react to it today. And we came in, we opened up a bit lower. This rally, happened after the cash close, so to me, it's not I'll say legitimate rally. It's not a strong rally, but the volumes are kind of light. A couple hundreds here. It's sort of, it all sort of manifested in the last 15 minutes. So it's just a big order getting executed there. And often, once the market closes, I do expect the market to come in a little bit lower. I would have been surprised had we opened higher, but nevertheless, I'm still in the money. Again, I wanted to get a runner or see what I could squeeze out of this trade. We came in lower during the Asian session. Or sorry, not the Asian session. This is the reopen. I covered it just after the Asian open. And we started heading back down. That's what I wanted to see. Now we came up to this high here at 79. We took out the high. You got a divergence. I got this selling balance. And at this point, I was sort of spent already with this. So, short at 85, I covered it at 77 3/4. So, this was the big fat winner. Yeah, again, I could look back and, sometimes I kind of kick myself for not getting out on this price rejector. But, if I get out, it's going to, where would I be getting out? Around, the 75, 76 level. I don't think I would have gotten out, somewhere near the low. And again, this move happened pretty quick on not a lot of volume late in the day. To me, that's just an order. I don't know. Who knows what kind of order it could have been. Could have been some big local that was short all day long and, just waiting to the close to cover it. But it's not a lot of volume trading into the close after the cash close. So I mean, I would not have gotten out around 72. I mean, that's being ultra realistic. But at the end of the day, it's what is that? 7 points out of that move. So, it was a decent trading day. Okay, so thanks for watching this video. To learn more about the trading software used in this presentation and how you can profit from order flow, visit my website, www.orderflows.com. So thanks for watching this and see you on the inside. Bye-bye.